Let's pretend that we are in the 1980s, and out of curiosity, you're wondering what are the wealthiest countries in the world? You would probably get big names like Monaco and Switzerland bagging the top spots. Believe it or not, some countries with well-known economic powers such as the United States and Germany would be somewhere in the 13th or 14th. But all the way to number 28, past countries like New Caledonia and Andorra, we have the country of Ireland. But I guess the luck of the Irish worked its magic because Ireland now has the fourth biggest GDP capital in the world. Among the countries with over 3 million people, Ireland falls just a little behind the economic giant Singapore, but this was not the case before. Welcome to Financial Market TV. If you're new to the channel and enjoy content like this, hit that subscribe button and the notification bell. Also, please don't hesitate to share your comments down below and give this video a like. Let's get started. A few years ago, the world saw Ireland as merely a third world country. And since the start of the 19th century, over 90% of their economy was carried by their agricultural sector. Farmers and agriculturists made up the country's working population. And in the middle of it, the UK had been their sole trading partner ever since Ireland achieved its independence in 1922. And their major exports? Beef and dairy. No surprise there, considering how dominant the agricultural scene was. However, Ireland was finding it difficult to catch up in terms of economy and technology with the rest of the world. This led them to venture out into different economic strategies. How? Well, during the Great Depression, the Irish noticed that countries with free market were the ones whose economy fell, well, in a depressing state. On the other hand, countries under communism had quite an economic boost and were fairly in a good place industrially. These countries were like the Soviet Union and China. This led statesman Eamon de Valera, who took a few notes from the said countries and a few more Western influences to switch up their game. Ireland monopolized a huge percentage of their local goods, even cutting ties with a number of foreign investments along the way. It was that or raising the tariff on certain imports from other countries. They were on their way to become more and more economically independent. But not everything happens the way we want to, and certainly not for the ever unpredictable pace of the global economy. Right after, the Irish population dropped to almost half its number as the rate of people flocking outside Ireland rapidly increased. Somewhere between the 19th and 20th century, including the potato famine of 1945, Ireland's population went from 8 million to an astonishing 4 million people. Not only that, the situation also had a little hiccup with the Irish policy. Apparently, a lot of infrastructure such as factories, ports, and buildings were needed to industrialize a country. You could imagine bigger countries like China being able to produce these resources without a problem due to their giant population. But Ireland was no China in terms of this. With less than 1% of China's size, it would have been difficult for Ireland to come up with its resources. Plus the fact that its population was smaller than that of New York City. It would have been a challenge to achieve sustainability. Another thing was that Ireland was influenced by both West and East, making it somehow neutral during World War II. Moving on, Ireland saw their supposedly new and improved policies have taken a drastic turn. Decade after decade, they continued to fall behind other European countries. This pushed them to go back to the drawing board and once again switch up their policies. Ireland opened its doors again for foreign investors by 1957. They further embarked into international trade from a lot of countries. They sold many state-owned businesses and invested into the education sector. By 1973, Ireland was welcomed into what we call now the European Union, creating a path for the hopeful country to become a modern industry. Although it was not smooth sailing from there, Ireland was dealing with bank strikes, high taxes, uncontrolled government spending, and even an oil crisis. This caused Ireland to face one of their biggest downfalls. The unemployment rate was at 17%, a close enough comparison to what we are going through today with pandemic-driven lockdowns. Several parts of Ireland experienced power outage, causing some infrastructures to waver. The drastic impact on Ireland's economic status earned its nickname the Sick Man of Europe. In fact, it was devastating enough for their government to be extremely alarmed and take further measures. They came up with what we call the Talit strategy. This is when political parties joined forces in order to come up with urgent, extensive, and of course, long-term solutions that would benefit the country. Surely enough, the reforms during this time created an impact on the country's direction economically. The government stopped borrowing money, cut their taxes, searched for investments, and stretched their private sectors across the EU. Just a little before the 2000s, these innovations were acknowledged and named as the Celtic Tiger, one of the world's biggest economic expansions. You know how China supposedly was the fastest growing economy on the planet in the 1990s? Well, Ireland's strategies were in full swing as they outdid every country on a global scale. And yes, they outdid China as well. Their growth rate increased up to 10%. To get a clearer picture, let's put it this way. Back in the 1980s, if you were working in the Irish economy, you would be earning way less, almost 70%, than that of workers in the UK. But fast forward to 13 years later, your wages have surpassed them by at least 3%. Pretty impressive. The major reason as to why Ireland was thriving at that point was also due to the rise of domestic and foreign companies. You see, Ireland initially reformed to reduce their corporate tax rates. By 1980, Ireland had the highest tax rate in the world with up to 50%. But this dropped to being the lowest in 2000 when its rate decreased to 12.5. Arguably, the drop in taxes paved the way for private companies to small homegrown corporations to start developing. Currently, there are companies based from Ireland that have up to $1 billion in revenue. Considering that Ireland's population is only about 5 million, it has the largest homegrown companies per capita in the world. And as these corporations began to continuously build up throughout the countries, both inside and outside Europe, Ireland's economy continued to rise during the 2000s. Although there were a few dips during several times of financial crisis, Ireland was already one of the 15 richest countries by 2015. But this is where it all gets interesting. Ireland initially reported a 26.3% increase in their GDP in that year, but it was revised to be actually higher, jumping to an astounding 34.4%. This sent Ireland climbing to the spot in the Big Five of the richest countries in the world. It was like they squeezed almost 5 years of economic development in just a single year. So what was next? Let's look back to when Ireland was significantly cutting their tax rate. This attracted dozens of multinational corporations from all over the world, with some familiar names that you might have heard of in the modern economy. Naturally, Ireland's economy has become a haven for these multi-million or billion-dollar companies to expand in. As decades passed, the number of companies opening up their doors to the Irish industry skyrocketed. Think of any economic giant whose revenues reach billions, and we can assure you that there is a high chance that they have a main office on Irish grounds. Mainly tech companies. If you're wondering which ones exactly, we're talking about Google, Facebook, and Apple. But it's safe to say that these major enterprises were drawn not only because of Ireland's lower tax rate. Even countries such as Bulgaria, Hungary, Bosnia, Macedonia, and several of its European neighbors have even lower rates. So what is it that made Ireland such a catch for these corporate tycoons? Remember how Ireland invested in its education sector? This created a more dynamic and skilled workforce within its population. They also have competitive trade relations and much better infrastructure. These were Ireland's key advantages in drawing investments from these multinational companies. No surprise that it was Apple that created the biggest impact on the economy. With the gradual increases every year, by 2012, it was channeling around 20% of Ireland's GDP, which was about $35 billion per year. In 2015, Apple decided to shift their IP assets and profits over to their headquarters in Ireland. These assets were worth over a total of $300 billion, give or take. This business move alone single-handedly shot up Ireland's growth rate from less than 10% to somewhere between 25 to 34% overnight. But there is a catch. Since most of these are not taxed nor invested, these profits do not necessarily go straight to its Irish employees, nor the country's government. Apple even has stagnant money in the bank amounting to $200 billion, untouched and unused, although this money may be ready to be used as collateral for the Irish banks. So, bottom line here is, Apple was the lone major enterprise that carried Ireland's GDP per capita all the way to astonishing rates. And because Apple somehow led Ireland to put the pot of gold at the end of the rainbow, this economic phenomenon was known as leprechaun economics. What happens next? Ireland decided to establish a new standard way of reporting their economic data. They have what has been called a modified GNI, instead of using the GDP metric. Through this newer system, Ireland remains under the classification of a wealthy country, just behind the ranks of Western countries like the USA. Although this just wipes out the status of Ireland as being one of the top of the list of the wealthiest countries in the world. However, the GNI metric shows data that Ireland is actually one of the most indebted countries in Europe, considering the actual size of its economy. But they don't have to worry, since Ireland continuously has surplus from the government, brought about by the money being channeled into the country's banks from its domestic and foreign corporations. This concludes how Ireland took drastic turns for over the century. They started as an agricultural-centered industry relying only wages of mere farmers. Now, they have grown into a corporate wonderland for big tech names, but of course, we acknowledge the fact that 20 to 25% of Ireland's growth is thanks to the technology baron, Apple. Basically, Ireland's economy may be smaller than what it seems, but thanks to the various corporations, they paint Ireland as somehow wealthier and more sustainable than it actually is. Anyway, if these companies continue to shell out investments, profits, and their shares into their Ireland bases, we can definitely see this European underdog climb its way back up to the top of the list. I guess that truly is the luck of the Irish. Thanks for watching the whole video. Again, if you're new and like this type of content, subscribe to our channel. And don't forget to leave a comment down below and hit that like button. Also, click on the notification bell to get updated on our weekly uploads. See you in the next video!